All right, Naeem. Boom. Naeem, who could have foreseen the continuation of the bull market? Who could have foreseen this? Everybody thought recession, bear market, it's over. Multi-year bear market, no. Well, the global liquidity was going up the entire time, Naeem. They couldn't fool us. They couldn't fool us. They couldn't stop us from succeeding in these markets. Like I said before, a lot of what's going on in financial markets, yeah, working 24/7. You know what it is, Paxter. Let's fucking build. A lot of what's happening in financial markets comes down to who's going to outlast the other market participants. If you can't outlast the market participants, you're going to lose more often than not. Why? Because you can't withstand the volatility. I was just talking to somebody the other day who said they wanted to invest with me. And they said, yeah, I bought Bitcoin at X dollar and, it just kept going down and I couldn't stand the volatility, et cetera, et cetera. I sold it at like $40,000 and then it's at $110,000. I want to throw up. I said, yeah. That's what happens. When you're not invested with a consummate professional who can tell you what to expect, what not to expect, what's going to happen over the long run, you're going to make poor decisions that way. It's also why people can't bring themselves to actually invest into cryptocurrency, because though it is correlated and trades on a higher time frame alongside equities, they can't stomach the downside volatility. Therefore, they don't deserve the upside potential. The reason people are so comfortable in investing in equities is because if it goes down 10% and their 100 grand turns into 90 grand, even though they're upset about it and they think they just lost $10,000, they can stomach that level of volatility. And then what do they get? Well, you only deserve 10% of the upside now, or 20%. And so you turn your 100 into 120. But for the heroes who will bid, those who understand correlation, those who have the mental fortitude to control their emotions, and they see that 80% drawdown on their asset, and their money had essentially turned into dust, into fairy dust, disappeared into the ether, obliterated, disappeared. It's only the real heroes who will not realize that negative P&L, continue to DCA, continue to hold strong, and then benefit from the swing of volatility back to the upside, while all the fucking degenerates and losers who cheated their bags ape back in at the top due to FOMO, which then further increases the volatility to the upside and further increases the pump. For those like me, those like you, those inside the Discord, the Taylor's Code have liquidation events that are going to provide loads of capital for us to be able to exit our positions. That is what the heroes will do. The heroes will bid. And as I've said, global liquidity has continued to rise and rise. So they weren't going to shake us out of our bags. They weren't going to trick us. They weren't going to make us think that we're going into a bear market and we have to exit off of the pump and get out of our positions completely. Nope, not us. We held. We accumulated. And we're going to take a look at what we accumulated here. Mi bomba clat. All right, here we go. All right, gentlemen, take a look at Bitcoin, okay? So we talked about this on the stream just the other day. I may have just put this in the Discord. I may not have talked about it on stream, but either way, we're about to find out. I was looking at Bitcoin this way. So we've talked about this in the past. Classical charting. Okay. All right. Classical charting. You build long to go short. Distribution. Okay? People who are taking profits from this run up over here. We do a 6-8 month range of death. We break out, we come up, we tag the 1.618. What happens when we tag the first higher time frame fib? We come up, front run it a bit, and then we pump into it. This is where distribution starts to take place. So we hit our target, we build long, and then we break down. And then we break down. Okay? So what's happening here? When you're distributing and you're moving long, you're building long to go short, you're leaving lower levels of liquidity below. Okay? So you're not technically breaking and breaking down from this level right here where we consolidated for a moment. Okay? So you build long to make it look like we're going to continue to go up higher, make people think that they have still time to ape in, but this is really distribution. They're pushing price up higher to get people to buy in. They let go here. They catch it here, let go here, catch it here, let go here, catch it here, let go here, and then they let it die down. Okay? So that's distribution. You build long to go short. So 2020 hindsight made sense. This time, we come back up, we reclaim the 1.618, and we start to build short. That's the difference. You saw here that we start to build short on this structure. So let me draw it like this. Right? So you can see pretty clearly that as we built here and distributed, we went short. Here it looked like we were building short to go long, right? And then you see what happened. So you consolidate above the previous all-time high, the 1.618 fib, turned it into support, and then we create this range. When you build short, you do what's called stacking highs. So we stack this high, and then we were coming to stack this high, what we actually did, because we went like this and rejected. Okay? And when you stack highs like that, what you're doing is creating liquidity above. Okay, you create these three highs of liquidity. So here's how the market works, so you understand technically how it works. When you stack these highs and you create these this liquidity here, and there are actually heat maps that will show you this. We can take a look at. You're stacking short liquidity. Okay, so what does that mean? People who opened up shorts at the highs here are all in the money or all open in their positions. So there's liquidity up in these price ranges, meaning what? Well, when price returns up into these levels and you start to get wicks like this, right? This one right here, where you break this high, but we haven't broken this one. You start to close out people's shorts and you start to liquidate people out of their shorts. So you create liquidity when these people close their shorts. Why? Well, when a short closes, you create a market order buy. Okay? That's how a short works. When you open a short, you open a sell position. And then when you close a short, you enter a buy position. Okay? Opposite with the long. When you open up a long, you create a buy order when you open it. And then when you either get liquidated or you close your long, you create a short order or a sell order. Okay? So, why is that important? Well, when you stack liquidity like this, and the liquidity up here is going to be built up of what? It's going to be built up of short positioning, because these were the highs, people short it back down. These are the highs, people short it back down. You didn't clear these highs. This is why we say building short to go long, is because when you leave these highs stacked above without getting taken out, right? So this high gets left, lower high. So it doesn't take out this liquidity, doesn't close these people shorts. They're still in the money. They haven't been liquidated. You understand? So they're still open. The sells are still open. Didn't take the high again. Keep the shorts open. Didn't take any of these highs, but you stacked them. Okay. Now we break out here. This move here is a retest at the top of this range. But as we break higher and price moves above these levels, these highs that were stacked, what's going to happen is you're going to get a cascade of short positions to either close or get liquidated because they hit their liquidation price as the price went up higher. And all of those shorts closing together creates this event where it triggers a bunch of market buys, and that's what continues to pump price up higher. That's how you get those big pumps. Because when you have no longer any shorts open, suppressing price down, you can rip freely. So that's how a market works. So if you're building short like this and you're stacking up highs and you're able to break all the way up and back above and push through those highs, that's when you get a fucking big breakout. Okay? So that's what we had been doing. I said, all right, cool. Looks good. Like it. So we're still running. This is either going to happen this week or next week. We're definitely going to break out. And then, let's see. What was I going to say? Oh, yeah, global liquidity. Another reason that we had known that the bull market wasn't over was for this indicator right here. So let me actually get rid of these drawings. So here's global liquidity. Let's look at the weekly. Yeah. Okay. So global liquidity across the globe is continuing to move up higher. And I've been saying that this chart matters. This chart definitely matters. Why? Because the more liquidity that's available to drift into markets, the higher price floats. Okay. So we top here at this level with global liquidity, money that's available, monetary supply. Okay. When monetary supply was at this all-time high, that's when you get the lagging effect from Bitcoin, and you see Bitcoin go up to what? New all-time highs. Fantastic. So we'll call it right here. Okay. We pull back in liquidity. Liquidity goes down. What happens to the price of Bitcoin? Lagging effect. Liquidity goes down. You get this big nuke. Okay. So now what? Well, global liquidity from here had ran up higher, broke through its previous all-time high, and ran even much higher than it was before. So naturally, if this is a leading indicator, this is going to be lagging what global liquidity does. What do we think is going to happen here? Again, we've been saying this. At some point, it was going to happen. Massive uptrend, steep uptrend. Bitcoin pushing back up higher. If global liquidity is at new all-time highs, significantly up at new all-time highs, what do you think is going to happen to Bitcoin? Just a little tiny break of previous all-time highs, or we're going to go up much higher? We're going to have a significant break to new all-time highs. It all makes sense. We've been saying this makes sense. Macro, we're still bullish. Macro, we're still bullish. Doesn't matter what happens to altcoins, doesn't matter what happens to the local price action these last couple of months, etc. People can't handle it, etc. It happens, but we weren't in a bear market. We didn't exit positions for a reason. Because of this, the cycle's not over. And we've played this beautifully, as mentally challenging and exhausting as it may have been for some of you. We held. At least I did. We held our positions because the cycle's not over. So we're at new all-time highs of global liquidity. Fantastic. What else is confluent with this? Well, now you have equities back at all-time highs. Okay. So this was the all-time high that we had set, 61.3801. Clear breakout. Okay, clear breakout. Equities lead, Bitcoin and crypto follow. This is huge. So then I had also drawn out these fibs. So I put the range, mid-range, top of the range. So I'd drawn these fibs just to see where equities would go so we could get an idea as to when crypto and Bitcoin would be topping. Equities, the 1.618 is at $6,800. So I'm expecting a move like this throughout the rest of this year where we get a something similar to that. Okay. So something similar to this where we break out, we send it to the 1.618 on equities. Bitcoin is going to break out and go to new all-time highs. What's the target on Bitcoin? I'll show you right now. I've seen more conservative targets, and I've seen some that are overshooting. This is the target. This is the real target. Equities goes to 6,800. Bitcoin goes to 156,000. Another 40% from here. Okay. Equities goes up another X percentage points. And what's showing us that that's likely going to be the case? All-time highs on US 100. All-time highs on S&P 500. Almost all-time highs on the Dow Jones. Very close. Dow Jones about to go into price discovery. IWM. This is how you're still early to Ethereum and altcoins. IWM is the risk on indicator in equity markets. So it's very similar to how Bitcoin is at all-time highs currently, just as the S&P 500 is. Yet Ethereum is well below all-time highs, even though Bitcoin's at all-time highs. So IWM is similar to the Ethereum for equity markets. Why? Because it's the risk on indicator. So even though equities are at all-time highs, IWM still hasn't been repriced to the upside the same way that S&P has. So S&P is at new all-time highs. IWM is still well below its previous all-time high move. Just the same as Ethereum is, okay? So this is important to understand this relationship. Ethereum doesn't go into price discovery until IWM goes into price discovery. Why? Because it's the risk on indicator. It's showing how much appetite investors have for high risk, high volatile assets. How confident are they in the market? So IWM is the Ethereum of equities. This is obviously moving up, right? But you're not going to see the fireworks on Ethereum that we're going to see, and you guys are going to lose your minds when you see it. You haven't seen the fireworks until you see IWM go into price discovery, okay? Once this is in price discovery, you're going to see Ethereum start to run hard, okay? This is the alt season indicator as well. So I actually put Ethereum down below just to show you the relationship. So let's add... the fuck? The fuck? All right, it's not working. Anyways, can I refresh this? I fucking refresh this page. All right, anyways, it's not working. But IWM, you got to see this go into price discovery, okay? Because every time this has gone into price discovery, that's whenever you see Ethereum and altcoins run hard. So for those of you that are not inside the Discord, the advice I would give you right now is you're probably going to want to start accumulating some of those altcoins again if you've cheated your bags or if you have extra capital to do so. Why? Because we're close. We're close to that point where we're going to see shit start to pop off. Because the risk on iShares Russell 2000 ETF is moving up higher and heading towards all-time highs. So we're drifting. QQQ, all-time highs. Okay, so all the major indexes and equities are at all-time highs except for Dow Jones is close. IWM's coming. But QQQ, US 100, S&P 500, all-time highs. Fantastic. NVIDIA broke out, new all-time highs. Look at this. Look at the breakout Coinbase had. Broke out of this channel, fucking running. Robinhood, all-time highs. Look at that. All the crypto stocks running hard. They gave us signal beforehand. Look, these crypto stocks are giving you signal. Coinbase, pumping. About to head to new all-time highs. Robinhood, pumping at all-time highs. Crypto stock. What does that tell you about crypto? If crypto stocks are leading, if crypto stocks are pumping hard as fuck, what do you think is going to happen to Bitcoin? What do you think is going to happen to Ethereum? What's going to happen to your altcoins? Circle. Looks like it's going to come for that. Yep. Looks like it's coming for the fill. We might get this fill. This gap fill. We got this gap fill, meaning that it's going to come back down and close the gap between the price action here from close to open sessions. But Circle is the stablecoin USDC. This is obviously doing well. So crypto stocks are performing well. Interesting. What do you think is going to happen to crypto? VIX getting crushed. Love that. So VIX volatility is down. Coming down. We needed to come down into this demand zone when we had our fat run-ups last time. So we need to get back down lower. DXY. Who could have foreseen? Who could have foreseen? Who could have foreseen these levels? Perfect level. Clearly this was the level 2. Look where we bounced. Right here. DXY is now entering the demand zone where we were during last alt season. Last cycle. So November, December 21, when Bitcoin and altcoins topped out that year, and then we went into a multi-year bear market. That was the level for DXY. Okay. Beautiful. So, as the DXY continues to nuke, the value of the US dollar goes down. People are going to flood into risk assets, into equities. This is why you see it happening. Look, we drew this arrow, boom. We drew this arrow. It's coming down. We'll probably get a little bounce in here, into here. If we get a move into this demand zone, this is where the peak of last 2 cycles were. 17, 18 cycle, first Trump presidency. May 21, when Dogecoin went up to $80, $90 billion market cap, the greatest alt season to date, was at this level on the DXY. If we can get back down into here, the people who are new to this and that have been trusting me to invest and accumulate, you don't really understand what's going to happen. You don't understand what's going to happen, which I love. I love that. I love the fact that you're going to make so much fucking money. It's going to be disgusting. And so you get this move down into here, it's going to be disgusting. But at the very least, we hit this level. This level was a good level for an alt season, an alt run. So we're at a good level for the DXY for it to make sense to be bullish on risk assets. We want a continued breakdown of this down into 2021 cycle top levels, 2017, 2018 cycle top levels for crypto. This is the play right here. That's what we need. Okay? So we're there. We're close, gentlemen. We're so close. So fucking close to the fat run-up. Hey, yo, Bobby. TML fans in here. Oh, wow. This is the same guy, Priyama, that was begging everyone to vote for Tim Walz. No, I wasn't begging people to vote for Tim Walz. You must be confusing me with Logan Bauer. Logan Bauer was at those Harris and White Dudes for Harris rallies. So you must be talking about him. Okay. And then let's see here. So let's look at others. Okay. So now here's others. This is the alt season, the altcoin chart. Okay. So for perspective, 2017 cycle, this is what altcoins combined market cap looked like. Topped out. Multi-year bear market. 2021, look at how disgusting this alt season was. From down in here to a couple $1 billion market cap up to $4. Think about that. Altcoins went from a $8 billion combined market cap, all altcoins. Within a year, 2 years, was up at a $425 billion evaluation. Disgusting run up. $485 billion evaluation. Disgusting run up. So this was the 21 cycle. This is 2017 cycle. Okay. Multi-year bear market. Okay, we're going through a new cycle right now. This is what I was saying, where this 21 cycle run up from here up into here. This, let me try to show you so you understand. This is this right now. Right? This reaccumulation and movement and price action is the equivalent of where we're at over here right now compared to where we're going to be at as to what happened last cycle. Does that make sense? This price action looks meaningless over here compared. It was dwarfed by the move that took place at the end of the cycle. That's the type of move I'm expecting over here. This green price action right here before the actual blow off top in all seasons in the last year of the cycle is basically what this is right now. That's what this is. This is going to be fucking minuscule compared to the run up that we're going to have here at the end of this cycle, because you're going to get that blow off top. So anyways, we've been closely watching this. This looks like to be the low. This looks like to be a great accumulation zone. We'll probably start trending up higher after this. Okay. So this move is similar to this move is what I've been trying to basically say. So you get this move up, come back down, retest, come back down, make a lower low, come back up, make it move up higher, come back down, make a lower low compared to here, as we did over here, made a lower low. You make this lower low, and this looks to be the move now that you're going to see to up higher. So this move, you create this lower low, and then you essentially, it was November. Yeah, November, start trekking up higher to this one on the range. Okay, the range high. Come back down. Bled to the same level. Okay, this marked the low. Doing the same thing. This looks to be this low right here. And then we're going to start ranging up higher. So with this altcoin move, it's going to be quick, because when we get back up to this range high that we set from 2021 cycle, right? When we get back to this range high, I don't expect a rejection this time, because at this point we would see Ethereum breaking out to new all-time highs. Bitcoin's obviously making its second breakout to new all-time highs this cycle. You're going to see the altcoin chart also break to new highs. And this is what I have marked out here. So you get Bitcoin up to 155,000 to 160,000 later this year at this 1.618. you're going to see this altcoin chart run. Another almost 3x. 3x on altcoins. That means your altcoin, at least, unless you're holding the large altcoins, 5 to 10x. That's the move that's about to play out. Okay? And again, patience. It takes time. This shit doesn't happen overnight. People want to get rich overnight. People hope that markets are up only all the time, etc. But the only reason you're able to make the money that you're able to make is because it's not exciting, is because it takes time, is because you have to outlast the other market participants. That's the reason. Is because it's not easy. If everybody could just fucking buy at the lows and hold forever, there would be no money to be made because somebody's got to lose money. If you're going to make money, somebody has to lose money. Okay? And it's not even a 50-50 thing where half the people make money, half the people lose money. It's not even like that. It's just, it doesn't even work like that. 10% of the people make 90% of the money. And 90% of the people lose money. But it is an equilibrium in the sense that in order for somebody to make money, somebody has to lose money. Okay? It's just a lot more people are losing money than are actually making money. It's not 50-50. It's not a 50-50 split. Yeah, TML is a fan of dudes, Boba Fett. He's a fan of dudes. He's going to the gym to bicep curl some dicks. All right. So, but yeah, that's the play that we're looking at. You guys already know what it is. We know what coins we're talking about on YouTube. I'm not going to go over that 10 different times. If you're not positioned, you're not positioned. You need to get inside the Discord. This is U.S. government bonds. Let's take a look at this real quick, and then we'll jump off. So I was saying before, 4.5% is the sweet spot for government bonds. If government bonds are above 4.5% on the 10-year, equity markets typically return less than a few percentage points on the year. It's a terrible return. When 10-year yields are below 4.5%, equities typically yield closer to a 20% return for the year. Big fucking difference. Why? Well, because at that point, that's when large investors, people with massive portfolios, are incentivized to hold risk assets, which are what? Equities, crypto, that shit. They're not themselves holding crypto, but they're holding equities, which is then going to in turn create a wealth effect for other people who are then going to go buy crypto, etc. But the point is that if the yield is low enough on bonds, there's not an incentive to hold bonds. So that liquidity flows into equities. If the yield in bonds, which are no risk inherently, they're still risky because the U.S. can't honor them, then you're fucked. But under the assumption that the U.S. government can back these bonds still, it's very low risk. So if they can get above a 4.5% yield on the 10-year bond, they're going to move their money out of equities into bonds, like Warren Buffett was doing last year. So again, it's supply and demand. Does it make sense for people to do it? Now that it's below 4.5%, you're starting to see this move back up in equities, because as these bond yields start to come down lower, more and more money is going to flow into equities because they're going to be selling their bonds, getting out of bonds, and getting back into equities because the bonds aren't going to be worth it to hold, okay, or worth it to continue to buy. Do you understand? So this is a very important catalyst for what's going to happen over the next month or two. Is we need to make sure that these bonds don't come back above this demand zone. When it gets above this demand zone, we're cooked. When you get above that demand zone, you're cooked. You get below this demand zone, we're all flying private jets all over the world, indulging ourselves with the finest Swedish and Swiss women around the world. But what's it called? TML fan will be indulging in men across the African continent, is from what I understood. But to each their own, right? To each their own. So this is what's going on with bonds. These are the key points I would be looking at. So DXY is going to be the big one. DXY is the driver of risk assets. DXY is breaking down. Huge. VIX getting crushed. Good. Bond yields going down. Beautiful. Let's see here. And then I'm just looking at the chat. The chat's fucking hilarious today. Who fucking sent these fucking Hey, this is an R-rated stream, Playboy. If you can't handle this shit, get the fuck off the stream. If you can't handle the jokes being made, you're not going to be able to handle the market volatility on 80% drawdown on shit coins and cat coins like PER. Which, by the way, PER, this is a good spot for PER. I told a couple of people earlier today, this is where I would be taking advantage of this. Cool. All right, gentlemen. Yeah, well, I hope you guys don't miss it. That's all I have to say. I hope you guys don't miss it. You probably will, but I hope not. Let's see. Mr. Producer, I got all them hoes, said Mr. Producer. All right, ladies and gentlemen. Double-digit live viewers across all platforms. We're seeing more and more people jumping on these live streams. Interesting. Must be a bull market. Must be a bull market imminent. I can always tell by the viewership on these streams when shit's starting to heat up. And why do I have fucking pride flags in the chat? You fucking imbichi. All right, gentlemen. Hey. To Valhalla. To making fucking millions of dollars this cycle. To becoming rich with the gentleman traveling across the world, indulging in the finer things in life. I look forward to seeing you guys on these trips. I look forward to seeing you guys retire your families, your entire bloodlines. I look forward to seeing those who held throughout the entire drawdown from December until now experience what a true alt season looks like. Because we're right there. Some people keep saying, there's no more alt season. It's never going to happen. You're holding on to a pipe dream. No. Alt season's still going to happen. We just haven't had the conditions yet. Everything that is conducive to and needs to be done to be able to get into an alt season hasn't taken place yet. Once IWM is in price discovery, once Ethereum is in price discovery, once altcoins are going into price discovery, that's when you see that wealth effect. That's when you see the alt season. That's when you see these millions and millions and millions of dollars flowing into these altcoins that the people who are holding from the lows are just going to print multiples. That hasn't happened yet. So when it happens, we'll be there to capture that opportunity. All right, ladies and gentlemen, that's it. I'm going to hit the gym. FML fan and A are going to go be some gay boys somewhere else. And then we're going to go make some money. Where's the stream ending? Perfect. Here we go. Mr. Producer. Yeah, Pompino's the man. Canadians will become a part of America here very shortly because Canadians can't defend themselves. They have no military, no infrastructure, no economy of themselves, require tariffs to be able to make money from the U.S. Canada's a failed nation, socialist country. They no freedom of speech, force you to use people's pronouns because they're gay. What else? Yeah, outside of hockey, Canadians are pretty fucking gay.